Well, I got some breaking news for you today, and no, it's not the government shutdown. It's the dismal jobs report that we got from ADP. So ADP just reported there were supposed to be 54,000 jobs created. Actually, there was a negative 32,000. So how's this going to affect the markets on top of a government shutdown? Well, that's what we're going to talk about in today's video, folks, because I'm here to try to explain to you guys what the heck's going on with these and the whys behind it. So let's get over to today's news. What's official? We do have a government shutdown, but that's not only the bad news that we have today. You go over to the jobs report. The jobs report looks dismal. So let's get over to the economic calendar so I can go through these numbers with you kind of briefly. Here's where the payroll numbers came in at. ADP said that previously there was supposed to be 52,000 jobs being created during this cycle. Actually, there was a negative 32,000. That was the revision. Now, before we all freak out, let me dive into some of the details with you. I just went over the report, watched the ADP payroll reports. Here's the kind of the silver lining behind some of this stuff. What they were saying is there's low initial hire rates, but there's also low firing rates. So we're not having, mass layoffs. The good news also is if you stayed on your job, your earnings are now 4.4% higher than they were last year. Now, you might not feel that way, but that's what the analysts are telling us. If you move jobs, if you change jobs, you actually got a 6.6% raise. So that's what's going on with wages. Now, with the jobs report, here's what's happening. ADP came out and they said we recalibrated this time because of all the data that we were missing or lagging. So what they said is once a year they come in and they kind of recalibrate things. And unfortunately, this was the time that they did it, right when the Federal Reserve is going to be watching this data and all the markets are going to be watching this data. So when the data came out, the markets reacted accordingly. We saw the MBSs spike up 20 points. The markets are starting to settle a little bit, but you have to really read into the data to figure out what's going on. So not massive hiring, not massive firing. If you stayed on your job or you changed jobs, you earned a little bit more money. So that's what we're seeing in the markets right now. But if you go over to how the markets are reacting to this, let's get over to the stock market. Stock market's kind of red all the way across the board. Here's the tough thing. Yesterday in last night's video, we had all the markets up really good and we had mortgage rates coming down. I'm like, with a government shutdown, how in the world is the stock market doing any good? Well, now they might be finally realizing right through here. Stock futures fall on fears of drawn out shutdown that hurts the economy. So we're going to see how this plays out. I don't want to get political. If you want to, you're more than welcome to do that down below. We're going to see how this gets drawn out. The longer the duration of time we're in the shutdown, the worse it's going to get, folks. And there's also going to be mortgage products that aren't available to you. Like, VA won't be affected, but USDA, if you're looking for a USDA loan, you might not be able to close on that loan. FHA, you might have some delays. So please check out with your lender if you're working with us. Please reach out to us. Let us, make sure everything's going fine. But let's get over to the economic calendar for the rest of the week. There is some, but nothing that we can really hang our hat on because the government shut down. So we're not going to get initial jobless claims, continued claims tomorrow. We're not going to get average hourly earnings or the unemployment rate. And that's one of the things the Federal Reserve watches. Their biggest concern right now is the unemployment rate right through here. They came out at the last meeting and said, okay, we're going to cut rates. We know inflation's going up because of tariffs. It should be a one-off. But here's where we're really focused in on right now, the unemployment rate. So now with this new news from ADP, what does the percentage look like now with what the Federal Reserve is going to cut? Are they going to cut now? Well, the federal funds rate is 4.25 to 4 to 4.25. That's what you have to understand. We go over to the RateWatch tool. Where are we looking at? Is the Federal Reserve going to cut rates? Whoa, there is basically a 100%, well, 99% chance they're going to cut rates. See right over my head? You can see 3.75 to 4. That means that's where the Federal Reserve is going to be at the next meeting. That means there's a 0.25% cut. Also, some more good news. It looks like at the December meeting, there's over an 85% chance of a rate cut. So it looks like there's rate cuts coming down the pike. That might be actually good news for the bond market, especially mortgage bonds. So let's get over to that. So here's what I want you to understand. This is what we focus in on my channel each day. We don't focus in on the 10-year Treasury. Well, you can if you don't have access to the MBS. But what the MBS is a mortgage bond that trades on Wall Street. Okay, this bond, how it works is the yield on this thing is the biggest component of your mortgage rate. So how this works is, what you see at the top there is that's the price of a mortgage bond. Okay, so if you see any mortgage or if you see any bond, if you see the price, well, here's how it works. If the price goes up on each day, well, that means the yields or the interest rate's coming down. So if a bond price goes up, yields come down. Well, in this case, because it's a mortgage bond, well, this means mortgage rates are going to come down a little bit. Okay, so when the rates or the price goes down, rates go up. So we don't want it to go down. So we like this chart for today. Let's get over to see where mortgage rates are starting for the day, 6.37. So I'm expecting this to drop just a little bit today based on the 10-year or the MBS. So we might be about 6.35, 6.3. No major moves today, but please pay attention to this, especially if you're looking to buy or refinance because, well, let's get over to it. Let me explain to you who I am and what I do just to help you guys out if you're looking to buy or refinance your home. So my name is Frio. I do this report each day. I'm licensed in all 50 states as well as Puerto Rico, so I'd love to be able to help you use my 30 years of experience in this business to help you maneuver through this whole process. I work at a bank that provides me a federal license, but the cool thing here is we have a slogan. It's one application, one credit pool. We're going to compare your loan to over 30 different lenders. How do we do it? Well, folks, we're set up with over 30 other lenders. So when you call in, we can offer you, if their rates are better, they have a program we don't have, such as Rate Through Here. If you're looking to buy a house, here's a program right through here. This is one of the partners of ours. It'll give you up to $7,000 in down payment assistance. So we can use programs, we can use rates, we can use all their, everything that they have, even niche programs like that to help you guys out. So make sure when you're out there searching for a mortgage, you take advantage of our system where it's one application, one credit pool. We're going to compare your loan to over 30 different lenders. So folks, we also have a new RateWatch tool right through here. If you want me to watch the rate for you, so let's say you're at a 7% rate and you're like, Dan, when rates hit 6%, I'd love to refinance. Can you help me with this? Well, sure thing. Go in here and hit the RateWatch tool. What you're going to do is click that. Go through here, fill out the form. What it's going to do is provide me your mortgage information. And then when the mortgage rate hits your target point where you're looking to refinance possibly, I'll reach out to you and I'll send you a quote and we'll go over your new payment, what your savings is, what the cost is, and what your break-even point is. And it makes sense, we'll get you locked in the paperwork start. If not, we'll just add you back to the RateWatch tool and just lower that rate until it makes sense. So that's our report for this morning, folks. We will be live to show you exactly how that works later this afternoon at 2 o'clock. Me and Alan will be here. We'll show you how we compare your loan with over 30 different lenders to ensure you're getting the best rate and the lowest fees in the market. So thanks for watching, folks. Please, if you haven't done so yet, I'm trying to hit 40,000 subscribers. We're 1,000 away. Can you get me there this month? Well, all you need to do is subscribe over there. I'd greatly appreciate it. Thanks so much for watching. I'll see you at 2 o'clock on our live event where we're going to compare your loan with over 30 different lenders. Thanks for watching. See you then. Bye-bye.